This is our Forex blog for February 9th, 2011. One of the things that I like to do before taking any trades is just to see which currencies are strong and which ones are weak. Between the dollar and the yen, clearly the yen's weaker. The daily, weekly, and monthly trend are down, and the real-time trend is showing lots of peaks at or above the dotted 80 line, which is showing extreme strength. Strength or weakness. And so you want to find a very strong currency to trade against the weakest one, which is the yen. The daily, weekly, and monthly trend of the euro is up. Same thing with the pound. The Australian has a weekly and monthly trend that's up, so you can certainly look for buys in that if you spot incredible strength coming in. But it's basically the euro and the pound that are strong, and the yen's the weakest. So basically you want to look to buy euro yen and buy pound yen. Let's start with the euro yen. Notice it's also above the hourly moving average. Anytime the currency is above the hourly, it's more likely to go up. When it's underneath the hourly, it's more likely to go down. You can see the daily, weekly, monthly trends up. The only downside, the first trade that I see here is a little consolidation right near the hourly last night. You might have bought that breakout here. Previous day's high is right here, which you can see, was yesterday's high. The official close time is 5 o'clock Eastern time. That's why it shows up right here. And it acts as resistance. You might have exited your trade here. And once it breaks out, it's very likely to go up. We have a Fibonacci level here that's very likely to stall price, and it did. So if you did buy this NR breakout trade right here, you might have only made about 20 pips. And it's usually best to wait and see how the markets handle major support resistance areas. So it hit this level, the third time a resistance area gets hit, it's very likely to break through. So you might have bought right here, and the next resistance is up here at the monthly pivot and weekly R1, and above that is the previous week's high up here. So when it went up to that level there, without a whole lot of real-time momentum, notice how far below it is of the dotted 20 line here. You'd probably exit this with a small 15 pip profit. It pulls back. On a tick chart, you might have got into that little pullback and again got out right here. And once it breaks through this resistance area, the next area is up here. And you can see that's about 25-30 pips away. Let's look at the pound yen. These are the two highest probability trades. This one also started the day or last night underneath the hourly. When it broke out right here, you might have got in the trade. It kind of went sideways. You might have got out of that trade with a small win. When it broke out of this area here, you got in and it went up 10 pips, which is more than enough to move your stop to break even, or you might have lost 5 pips on that. It pulled back right here, and if you're looking to buy right here, one of the tools that we're going to be releasing soon is ultra fast and letting you pinpoint precise entry times to within 2 to 5 seconds. So on a tick chart, you would have probably found an entry somewhere down there near 40, and this just kind of worked up. This would have been your resistance area and likely profit target. My main criteria for taking a trade is what are the odds. Is the daily, weekly, monthly trend up? That improves odds. Is it above the hourly? That improves odds. Is it not up too much? In other words, is it below the upper containment bands? That improves your odds. And the IntelliTrend color improves your odds. Seeing a previous burst with more momentum than before improves your odds. So this trade right here, you have a resistance area about 20 pips away. You're risking 10 or 12 pips to make 20. That meets your criteria. And if it shoots through that area, then the next profit target level is up here near 90. And if it goes up to that area without that much momentum, you probably want to get out of the trade. If you're a counter trend scalper, you might, once you see that the increasing momentum here all but die, you might have actually looked for some counter trend trades right there, especially if you see a currency that was weak the previous day, or many other reasons. Real time wise, the previous swing was from here to here, and usually at the 1.618 or 1.32 fib target, trends end. And when anytime trends are half of what we consider an intense trend, where the dotted 20 line is, it's likely to reverse. And when it shows almost no momentum at all, very much so. So looking at this from 5 to 6 right here, you might have, let me just find this one here. On a tick chart, you might have looked for entry back then using a very precise, very fast tool. What was the exact time where it went up there? That was from 5 to 6. If you had, waited for this reversal here and it pulled back a little bit, you might have had a small win there. You got short here, it went down 10 pips. And then on the pullback back up, you have a little bit of red here. When it breaks down right there, and you get short up here, it's maybe around 75. You might have got out down here at 50, with a 15 pip profit. You go short again, and especially if you have any kind of scalping based levels where you're looking for fib targets to exit with a profit. Obviously when you're fighting a longer term trend, this tool is ultra fast and designed for scalping. Previously on this uptrend, when it broke out of the range right here, you might have bought this breakout right here, and then it kind of pulled back a little bit. Anytime you see a little sideways range like that, you're definitely putting your stop underneath here. This is pure scalping here, not looking for 20-30 pips like our normal systems. As long as this is mostly green, and here you see some red, you realize that this trend is very likely to be over up here. You're in at 55, out at maybe 68 with 13 pip profit, unless it goes higher. Your stop doesn't get hit, that's fine. And at some point, you got to have your fib targets drawn on here, and usually at the 1.618 level. Don't be greedy above that level. If it goes above that level and comes back, you're usually out right here around 80. So you're in this trade at 55, out at 80, made 25 pips. And we'll go over this new tool in our class. It's probably not going to be released till next Tuesday or Wednesday. And I'm probably going to give it to our most active traders. If somebody's not trading 10-20 lots a month, you don't need that tool, But if you are, we will reward you for your high trading activity and teach you how to use this tool. Alright, so getting back to the currency meter, the pound was pretty strong until 6. The euro is mostly strong today. The Australian was pretty weak. The real-time momentum was down. The daily trend shifted down. You could have traded the strong euro against a weak Australian today as well. Strong euro, weak Australian, and you can see the currency meter really finds these strong trends. You have a multi-hour breakout right here in the direction of all the trends. That's a good buy. This is your resistance area and likely profit target. Notice it didn't have amazing strength there, so your exit there with about 25-30 pip profit. It pulls back, you go long somewhere in here, and again I would have got out of the trade right here. And anytime a double top doesn't reverse, usually it does continue up. This was one of the stronger pairs. The euro consistently was the strongest all day, and the Australian was pretty weak. You got in this trade here. I probably would have exited the trade somewhere in this sideways chop. Bought this breakout again right here, and it went up. The last trade was the most profitable. It went up about 60 pips. It is the best tool we have, but it does require a little bit of patience. And if you see something like this sideways range, it only works in real time. I can't line up tick-based data on past bars. It's impossible. So I'm not even going to try to do that. So I don't have it running for the Euro Australian. But more than likely, when you got into this trade here and it just kept showing you greens, ultra fast tool, you stick with it. And the latest move up in the euro dollar, you can see later in the day from 11:30. I'll show you what it looks like with this super fast tool. Here's the euro dollar. Obviously this had a decent pullback, rallied up. You have a beautiful trend line entry right here, and even though this is the fastest tool you'll probably ever find for any type of trading, when you get into these pullbacks, trend line breaks, went from 85 all the way up to 20. And this was your first instance of red. What I've been doing with this, and I've only taken 3 trades from it, is when I see red, I wait for it to go below that bar's low, because a lot of times these strong trends, reverse and go back up. All this is telling you is that, the euro pairs are going down very slightly, and dollar pairs are getting slightly stronger here, but dark green. And you made 30 pips on this trade. Now, obviously, not all the trades are going to be that big, and if you had thought earlier today the euro dollar had kind of double topped up here. If you if you short one of the strongest currencies, you're obviously going to have lots of little whipsaws. But if you got short right here and here's your first green bar, you put your stop above there, never went above it. And here is where you would have got out somewhere at 5, maybe with a 6 to 7 pip net profit. I'm usually a little more hesitant to get back in again. If you had shorted right here, maybe you lost 5 pips on there, you got back in again here and wrote it down, 20, 25 pips, or even 10 pips here, and then 20 on the second one. This is going to find a lot of trades, and I'm going to give it. I didn't know what I was going to do with this tool, but I've decided to give it to our most active traders. So if you're an active trader and doing 10, 20 lots a month, or more, obviously some people are going to do hundreds of lots a month, because you're not going to trade one mini lot anymore. You're going to trade 5 mini lots to 10 or 20 full lots. Because otherwise, what's the point? Why waste your time? We're going to wake up in the middle of the night. We want to get paid for it. All right, so that's the end of today's Forex blog, and I'll start our regular class now.